Loving that intro as always. What's up, everybody? Welcome to What the FICC. Spencer Israel, joined by Ian Cully, head of FICC at All Star Charts. Ian, how we doing, man?
Excellent. Friday.
It's Friday.
Excited, getting ready for the weekend. But before we get there, let's look at some grain charts. Look at some of these oil seed charts here and see what's going on.
We're talking grains today: wheat, corn, soybeans. We have a special guest to help us do that, Angie Setzer. She runs Contest ROI, but she's the goddess of grain on Twitter. Before we get to Angie, she's got a really good point of view on the fundamental side of the market. But before we get to that, let's bring up the charts here. Let's just quickly rip through these, Ian. First, which markets are we looking at, and just rip through the charts and tell us what you see.
So we're going to kick off with corn. We're going to run through the wheat complex very quickly. The Chicago wheat, which is a soft red winter wheat, often used for cookies, confectionaries. Kansas City wheat, the hard red winter wheat. This is mostly used for general all-purpose flour. And then the Minneapolis spring wheat contract, which is a premium wheat with a very high protein content. And then we'll run through the
I have to confess, I didn't know there was more than one wheat. I have to be just being honest. I did not know that.
I'm sure there's much more. I'm sure there are more. And I'm sure Angie knows
all right.
All the different varietals. But then we're gonna run through the soybean complex real quick, beans, and then bean meal and bean oil.
All right, let's rip through these and then we'll bring Angie on.
All right. The overarching theme right now, tactically, is a lot of these contracts are running into areas of potential overhead supply. They're finding resistance at logical levels, whether they're former highs. Here with corn running to a key Fibonacci retracement level around 562. Hit that level yesterday, has turned lower and is continuing to trend lower today. It is interesting to see that the bulls did manage to push momentum on the 14-day RSI into the bullish regime, posting a reading above 70. We'll see if they can continue to press highs, be able to absorb overhead supply here and drive prices higher. When it comes to wheat, this is the Chicago September contract, running into resistance at those highs from earlier this spring. A little failed breakout above those levels early or late last month. But again, still finding a lot of supply around that 730 level, 725 level here in the September wheat contract. Moving on to the KC wheat, the Kansas City wheat here, overhead supply is coming in right around $9. Great looking chart. I really like the constructive basing that we're seeing here in KC wheat and in Minneapolis spring wheat. Bearish regime here. I want to see buyers drive prices above this level before getting long, and see a momentum print above 70 to confirm that the buyers are in control. Excuse me. Kind of same situation here with the Minneapolis spring wheat. Still, it's in a bearish momentum regime, but momentum is improving. The level for spring wheat is also around $9, 905. All these retests, and what we say, Spencer, the more times a level is tested, the higher likelihood it breaks. So watching for a breakout above that 905 level, if and when we get it, looking at maybe a run all the way back up to those September highs from last year, up around $10. Moving on to soybeans, November beans running into, let's say, that 14 level. Yeah, it looks extremely bullish. I gotta admit, I love this momentum profile here. Bulls drove prices higher in explosive fashion. Getting overbought here, and then now it's still the momentum's still hanging near those overbought conditions. So if and when the bulls can take out that 14 level, maybe we can get back up around 15, 16 here in beans. Moving on to bean meal. This is one of probably one of my least favorite charts, honestly. And if we want to get long bean meal, we can trade against that 408. As long as it's above 408, like a long up towards 437. 425. There's some resistance up around that level as well when we're looking at these pivot highs from earlier in the spring. I'd say my favorite chart has to be soybean oil. That's absolutely ripped in late 2020, 2021, really led the bull market for the soybean complex back then. And it looks like it's doing the same now. Bean oil, this is December contract. As long as it's above 62, which it is today, believe it's up around 63 right now as we speak. As long as it's above that level, I like it long all the way back up towards 70, getting back up toward the shelf of former highs from last summer. That's it for me.
A lot to digest there. So normally, obviously, if you watch the show, this is a technical focused show, but there's been so much happening on the fundamental side of the grains market in the last couple of weeks. If you watched us, 2 Fridays ago, I think 2 weeks ago,
Yes,
you saw us break down the WASD report. We've had several big reports come out from the government about with hard data. We just had some news this week about Russia and Black Sea Grain Initiative, and that seems to be dead. So a lot to digest here. And we thought, let's bring in someone who's more tuned to the fundamentals of this market, and that would be Angie Setzer. Let's get her on the show right now. Angie, thanks for coming on today.
Thanks for having me. I'm excited to be here.
And no, that was a pun unintended with the digesting, but yes, thank you for that comment in the chat. Okay, Angie, I don't even know where to start. So maybe that's my question. Where should we start?
Oh man. What isn't happening? I guess if you want, let's run back through the charts, just kind of in that order. I think maybe makes the most sense, and just kind of break things down by commodity, perhaps. Otherwise, we'll be wandering, meandering with my brain. We will be meandering for the next half hour if we aren't careful.
Well, maybe can we just start with let's start with wheat here, just because
we'll start with wheat. Okay,
that's the one that's been really moving. I'm guessing off of the backs of this headline that the Black Sea Grain Initiative appears to be dead. And first of all, explain what that was and the significance of this.
Yeah, so the Black Sea Grain Corridor, you'll hear me kind of comment, I'll call it the corridor or Black Sea, whatever, just it's kind of all encompassing. But the Black Sea Grain Initiative was an agreement between Ukraine, Turkey, and the UN. There was one agreement between those three parties, and then there was another agreement between Russia, Turkey, and the UN. So there was never an agreement between Ukraine and Russia, but the three parties basically on each side had agreed that each side would behave in a certain way, and there would be certain things that would be off limits and certain things that would be allowed or required, and that would allow and facilitate the movement of grain through the Black Sea, through the Bosphorus Strait there in Turkey. It would allow Russia to inspect the ships that were Ukrainian bound to make sure that they weren't loaded with military weapons. And it did provide an exceptional amount of grain movement, a significant amount of grain moved very quickly out of the corridor. So it was announced in July. And as it began, August, September, October, November, we saw massive movement through this corridor. It was deemed a great success. Prices just fell. And then all of a sudden Russia kind of realized that world prices falling also meant that their products got cheaper. And we led into this whole entire situation that we're in now, where it was on again, off again. Is it or isn't it? And so really when it comes down to it at this point now, that corridor, that area of water that had been designated a safe zone to travel in, and all of the rules that went around moving ships into Ukrainian ports and out of them, those have ceased to exist in the eyes of Russia. And now we just really have kind of stopped. And we have a bit of an escalation between the parties, but yeah, the corridor had allowed grain to move in the most efficient and cheapest manner, which is via big boats.
So what are the implications here for the wheat market, for our wheat market? or global
For
wheat?
our wheat market, really when it comes down to it, what you've really seen, the fact that it's been a Chicago-led move to me indicates that it's speculator buying that has come in. And so Chicago is not the grain, the specific class. So you kind of talked about the different classes of grains that are impacted specifically, or the different classes of grain. And so each class of grain has its own supply and demand, like its own set of fundamentals too. So like it's fun to break it into a commodity, that is wheat, and then you can break it into three other classes. And so one of the things I always watch when the market tends to rally is which class is leading. If it's Kansas City wheat or Minneapolis wheat, there's probably a problem that is happening in that market structure. A lot of times, if there isn't a problem, like right now in soft red winter wheat production, there's zero production issues. The U.S. has plentiful supplies. But to see the Chicago wheat market lead tells me that it's speculators that are coming in and buying, which makes sense because the implication is the flow of cheap grain moving efficiently out of the corridor is shut down right now for the Ukraine side. And so what would be a couple million metric tons of grain a month, which right now it's the off season. So that's one of the reasons why the market isn't reacting the way that it normally would, is we don't usually have a significant amount of grain moving out of these ports in July anyway. It's not really until September that it becomes a big issue. But the implication is you just can't move as much grain freely into the world out of Ukraine as you could using the corridor. So kind of think of it as like you have to move, right? And so you're moving your house, you're packing up everything and you need to move it. Do you rent a U-Haul or do you rent a U-Go? You know what I mean? Like, you're going to try to shove it all in your Prius because it's going to take you a lot of times. It's going to take you a lot of trips, or are you going to buy a trailer? And so this is the sort of same thing. The grain's there. The grain can still move, but now it has to go via U-Go versus U-Haul.
Got it.
Is there any information to glean from the tight spread between Kansas City wheat and the Minneapolis spring wheat?
Yeah, I mean, they're both hard red wheats. And so they're both wheats that are more human food. So we grow soft red wheat. Where I live, my farmers produce soft red winter wheat or soft white wheat. The soft wheats are candies or cookies and cakes. We're the fun wheats. You know what I mean? But when push comes to shove and you're hungry, or we're dealing with global famine or food issues, right? You need bread, you need pastas, you need durable food products. And so that's what your hard wheats provide. And so in addition to them both being more of a specialty kind of wheat, in addition, they both have had production issues in North America. Kansas City wheat is produced in the South, in the Southern Plains. And so if you look at, the drought monitor and the rainfall that you've seen, the Southern Plains is coming out of a 2-year, 3-year drought. We've had significant production reductions out of the Southern Plains. This past year has been one of the lowest crops out of that area on record, just due to the lack of rainfall and the increase in abandonment. And the same could be said for spring wheat, where you've seen a lot drier conditions in the Northern Plains. The problems in the Canadian prairies have developed and created some production worries. You've seen some issues with heat around the world that could possibly be limiting that spring wheat production, which is your Minneapolis contract. And so there are some other issues at play, like I said. So there's 3 classes of wheat, and each one of them have their own sort of supply and demand, both domestically here in the US, and globally. And so those tend to all play a role with market movement, and that is helping to keep those hard wheats tied a little bit closer together.
Is there anything about the way the wheat market is acting right now that would like send up like a red flag to you, or do you think it's trading, it's acting the way it should under the circumstances?
I think it's acting the way it should under the circumstances. I mean, we had that big rally on Tuesday. Was it Tuesday or Wednesday? We were limit up. And that was the day that it kind of dawned on us that this wasn't like the other times. The last couple of times it's been like, okay, yeah, Putin's going to threaten the corridor. And then he started bombing infrastructure. Whether the first time around was intentional or not, that's a big deal. If it isn't, the loss in flow of grain, like the loss in flow of grain is a big thing out of the ports. But if the ports are damaged to where they can't load grain for a year or 2 years, the Black Sea Initiative doesn't matter anymore. You know what I mean? And so that's when the market got more on edge, when the idea was that we could see port infrastructure damaged beyond repair or to where it would take over a year or so. It feels like Putin knew what they were doing, or that Russia knew what they were doing with that, where it was kind of like, I look at it as like siblings, right? Like, you knew you could rip your sister's Barbie doll head off and put it back on and it'd be all right, you know, but you couldn't break its leg off, kind of. And so like he's doing something that is bad, and it isn't great, and it concerns the world, and it could have major implications going forward, but he hasn't done something that can't be undone at this point. But the worry that he could do something that can't be undone, or that you could see Ukraine retaliate by attacking Russian ports, that's the whole other thing that really will kind of keep a risk premium in place. I will be surprised if we go home 27 lower. Like today, we're 27 lower in wheat right now. That would amaze me to a certain extent, just because we don't know what will happen over the weekend. So I would think we would see some level of risk premium come into play, but the fact that the global end user isn't panicking, and that we have, more than enough supply, as long as Russia can continue to ship their wheat, that will keep a lid on rallies for a while. But the risk will remain, and that'll probably keep us heavily supported for quite some time, until we get some sort of confirmation that, the grain deal will continue. It looks like this, and it's going to last this long. And that's going to take weeks, I would imagine, at this point. So we're going to be all over the place. But yeah, I guess it's acting like it should. Like, we have no idea. So I guess we'll be up 30 and down 30, and hopefully you choose the right direction upon your order entry, which that'll be what'll happen, is eventually just we see open interest and people playing this game starts to shrink, and then the moves get eventually it gets resolved. But yeah, for now, I would say it's behaving as I would expect it to.
A very apt analogy with the Barbie head, by the way, very timely.
You can put a Barbie head back on. You can fix, you know what I mean? Like, you can fix a grain leg. Like, you see one of them burning grain legs out of Ukraine. Okay, well, you can get a crane in there and pretty much in a couple months, you're back up and loading grain. But it makes you get worse than that. It's a different story.
What about the other markets here, soybeans and corn? What's your take on that?
Corn and soybeans. I mean, soybeans are the market that I'm going to be watching the closest. They're the ones that you said that about, if we could kind of stay supported here, we may make a run. I wouldn't be the least bit surprised if we don't see a run to old highs next week in soybeans. It's supposed to be 100 degrees in Des Moines. And if that comes without moisture, then it's going to be a different story. Now, before everyone says, oh my gosh, it's going to be 100 degrees, it's going to kill everything. Not really. Soybeans like to be used and abused a little bit. Like, to be completely honest, they like a little bit of a challenge agronomically for some reason. They're weird. They're like wheat. And so it is not a guarantee that we have production reduction, but I would say that the folks will take a look at that and take a look at the temperatures if they're realized. And we do see temperatures spiking to near 100 degrees Wednesday, Thursday, and Friday of next week. If that forecast lasts through the weekend, it wouldn't surprise me to see us move towards 1450 or even 15 on the November board. The soybean market at this point in time, we had that surprise reduction from the USDA at the end of June with acres. And so that reduced production expectations by a couple 100 million. The USDA then turned around and said, well, we're not exporting as much. And so when all was said and done, carryout didn't drop as expected. But the thing with soybeans is if you lose a bushel the acre, it's 84 million bushel. And so when you're talking about a 300 million bushel carryout, and you can lose 84 million or 168 million on a 2 bushel the acre move, you know what I mean? It's a big swing. Now, having said that, with the export pace that we're seeing and all of these other things, the USDA will have room to cut exports eventually, but the ebb and flow of this should kind of, I think, create a bit of a catalyst. And like I said, I wouldn't be the least bit surprised to see soybeans trade to new highs next week if the heat shows up without any rain.
Interesting.
Since you mentioned the USDA report, I was going through that and going through the WASD one. What should the takeaways from those reports be right now?
I think the biggest thing in those, just kind of looking through supply and demand is that we are stabilizing. We're even growing in corn. Corn demand, high prices have cured high prices, at least at this point. We're going to need to guarantee U.S. production is, somewhere around current estimates. We have some room for error in corn. We have a lot more room or a lot more margin for error in corn, simply because the USDA is anticipating this big increase in demand year over year that doesn't really fit economically speaking. It just doesn't necessarily make sense. And so for corn, the USDA report that came out, kind of just reiterates the fact that there's room, there's margin for error there. And really, when it comes down to it, it's probably not going to move all that much without some sort of significant surprise in August weather. Soybeans is the market that really is kind of going to be the most explosive. You've got soybean oil as well that's been benefiting from a push in renewable diesel and biodiesel demand and those projects. We had the EPA come out and kind of announce what they were looking at, which will support the market structure. We've also had a physical short in the market, I think, that got squeezed. That's kind of pushed this market to the high side as well. And so, soybeans, soybean meal, and soybean oil are all going to be kind of that market that remains on edge for a while until we get a better feel for what happens with China. We know what the U.S. crop is going to look like, and we see the Brazilian crop get off to a good start. And that won't be until November or December. So soybeans will be the fun market to watch for a while.
Is there a big, do you draw any information from bean complex rallies that are led by the byproducts? Is there a big difference between a rally led by soybean oil and a rally led by bean meal?
There used to be. The adage was meal is real, right? Mm-hmm. And so if soybean meal rallies, that tends to be an indication of a protein shortage in the world, right? So soybean meal is a 42% protein product that you feed to cattle or hogs or chickens, livestock feed. And so then, of course, when you're feeding something to livestock produces more protein, whether that's eggs, whether it's meat, whether, whatever. And so when you see soybean meal rally, and when the soybean meal rally especially is accompanied with a physical market rally, so your prices out of your world soybean meal exporters, US, Brazil, Argentina, if you see their physical prices also rally, then that tends to be an indication of either a supply shortage or a demand increase, or just in some way, shape, or form, a supply and demand, the equilibrium is off in some way. And so that's really why you hear that meal is real adage, is simply because, oil is there, and oil has taken a bit of a different role in the soybean byproduct market, obviously, by the renewable diesel and all of the biofuel sort of plans that we've seen. But meal is the market that you really want to pay attention to, in my opinion, when all is said and done, because it's what really will drive soybean crush too. You know what I mean? So if meal is rallying, then you're going to crush more, and you can store meal easier too. There's a whole list of reasons why a meal rally is more valuable or something you want to pay more attention to, I guess you could say, than the oil one. But the oil one still helps. I mean, anytime you see crush margins improve for a soybean processor, it's good.
Right. So,
for the farmer, anyway.
Right. But would you say that a rally where meal is leading, does that speak to demand necessarily?
A lot of times it will, yeah. I mean, you have to be careful over the last couple of years, because I feel like we have seen with the outside speculator interests and the outside markets kind of being as cyclical as what they are, where it's like we go from overwhelming depression to irrational exuberance, all in 1 month, basically, it feels like. And what that has done is kind of stimulated or reduced money flow depending on where you're at. And so sometimes you'll have a situation that may warrant a bit of a bump in price. It's exacerbated or has been exacerbated over the last couple of years because of that kind of influx of outside cash. And so you have to be careful not to read too much into it, just simply because you want to be able to watch, what's taking place in open interest and in volume, in my opinion, to see if it's a true rally or not. And so that's, for me, I manage physical products, or I watch what the actual value of a product is worth, as opposed to just paying attention to the futures. And so that helps to also feel if there's validity in the move or not. Once you start to see where the futures market becomes detached from what the person using that product, actually using that product, is paying, then you kind of know that there's something a little off. But if the physical market remains strong as the futures market rallies, or vice versa, then you know that the market is really kind of reacting to what is actually taking place at ground level.
Awesome. Very interesting.
I'm sort of out, and we're almost out of time. Ian, do you have anything else? Anything else on your list?
I mean, it's a long list. I don't even know where it is.
Well, my worry is if we don't stop soon, we'll be here all day, right?
Right. Sorry, there's just a lot. There's a lot. But yeah, it's fun. I'm kind of a nerd, but the cool part about it is if you're bored, with one part in grains, you can try to pay, weather's not exciting this week. Well, let's just go see what's going on with Black Sea or China or insert whatever, could be happening.
Just for historical context here. Is it just my perception, or have these markets been extraordinarily volatile in the last call it 3 years?
3 years. Yeah.
Yeah.
I mean, 5, I would say, for us, because we got caught up in the trade war, right?
Oh, okay.
So we had, 2 years ahead of COVID that were, the deal is on, the deal is off, exports this, exports that, because we had soybeans were the biggest thing, that China kind of could play with. And so we've played since I'm exhausted. Like, I feel like I'm that meme now. Like, it's been 84 years or whatever. I'm only 41 and I feel great. And I look like I'm 170. It's been a minute since we've had some calm. I won't even know how to react to calm if we ever get calm again.
I tell you, I don't miss those trade war days. I'll tell you that. That was exhausting to keep up with. Ian, yeah. Did you have something?
Oh no, I'm gonna have to reach out Angie later and get a full reading list. I need some direction into some studying to do.
There's a lot, so it's fun.
Angie Setzer, guys, if you don't follow her on Twitter, she accounts for the majority of my the vast majority of my fundamental grain market analysis. At Goddess of Grain, her handle's on the screen there. Angie, thank you so much. Anything you want to plug? You want to plug your business?
Oh yeah, check us out at consisroi.com. I put out morning commentary. We have a lot of different stuff that you can tap into. We're all over the place. We really our goal is to provide insight into how the physical market, how the cash grain market works, and why that really matters when it comes to trying to pay attention to futures. So yeah, check us out.
I just dropped the link in the chat for everyone watching. Angie Setzer, always a pleasure to chat. I guess the other side of the coin of the market being volatile is, hey, give us something to talk about, right?
Right. So people like to talk commodities now again, so it's like it's fun. I'm hip for a while, and then they'll it's cool.
All right, thanks a lot.
It's great.
Thanks a lot, Angie.
Thank you.
All right, I think that's a good place to wrap it up, Ian. Any final thoughts?
No, it was just amazing. Big thanks to Angie for coming on the show. And it just, I love this stuff. I love these markets, and I just, I love to learn from the experts.
Wow. All right. I'll have to hook you up with one.
That's very funny. We'll be back next week. Of course, the show airs every Wednesday and Friday, 11:30 a.m. Eastern time. If you're watching on YouTube, you want to do me a small favor that takes a split second of your time, just hit that thumbs up button. I'd appreciate that. If you're watching us on Twitter, well, head on over to YouTube and hit the like button. Thanks to Angie for hanging out. Thanks to all you for watching. See you guys next week. Have a good weekend. Go make some money.
See you guys.